Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. December 27th, 2013, and this is the Daily Report for Gold and Silver. As we go into our last week of 2013, we have been experiencing a nice little rally in the precious metals markets as we witness them moderately higher today, with gold up about $4 and silver up about 28 cents. First to gold, as you can see, 12.13, 12.14, running in that area. As I said, puts it up about $3 or $4 on the day. We'll talk about a former resistance level that looks like it might be forming some kind of support in just a few minutes. As far as silver goes, we're looking at a market that's trading at $20.05, so it's back above $20 per ounce. We are looking at support at around 1970 currently, the low 1975, the high 2023, and with gold, the low is 1209.20 and the high 1220. In very thin volume as we look at this markets between the holidays, meaning between Christmas and New Year's, of course, next week. I'm not expecting a tremendous amount in any of the markets, although we are experiencing a year-end Christmas effect rally, as they say in the equities markets. We're also experiencing a market in the precious metals markets that seem to have come off of the lows. We had formerly pegged 1211 as our resistance area. We are trading above it, just slightly above it at 1214.45. This particular 1211, this number comes from some recent lows that we hit, and you can see these back at the beginning of December. Market pops up, and these are different areas of resistance that we have. We'll talk about current resistance as well as support, all on today's shortened edition of the Weekend Review. We are looking at a 60-minute chart, and it is in a standard candlestick format. Now, I've just compressed it so we can take a look at the placement of our last fib retracement. And that fib retracement goes from 1294 all the way to 411, because that was the current low at that point. We are going to add one more fib retracement. We're going to fix it from the same high here, but we're also going to place it to our new intraday low. And as you can see, I've gone ahead and added another fib retracement. We actually do have three here, so I do apologize. They all start from this upper level, and then they all go to the three most recent lower lows that we got as this marketplace has been coming down. This, of course, is the low at 1186. When we do that, it gives us a couple of ranges. We'll want to, of course, disregard the zeros because, of course, we were just fixing them off of these lows here. And that should give us a clearer indication of where we can project different resistance and support levels. Of course, the one thing that we absolutely wanted to look at, this again is our lower level at approximately, call it 1211. Market is trading well above that. The next real point that we'd want to look at in terms of any kind of real resistance is going to come in really at these lows here at the bottom, and they come in at around 1221. Let's add a couple more of the fib retracement points in there. And when we do that, we get a couple of very interesting data points that are definitely worth us taking a look at. Of course, I took out the zero, but when we added this longer fib retracement, the 23% retracement level is really that 0 point, because it does, as you can see, match up with this low fairly eloquently. The next real level of resistance that we'll run into, should the market continue to run, I would look for, we talked about our projections. I'm believing that we're now in this fourth wave, 4 out of 5, this all being our final fifth wave down. The next real level that we're going to want to look at is 1227 and then 1231. Now, those, of course, are very minor resistance levels that we just talked about because we're looking at different lows, but the retracement sequence that we're using is very shallow in terms of the breadth of the highs and lows that we have. Going to our 720-minute chart, this is coming from the top of that rally at 1360. Realize we had really one major rally in the marketplace itself, and that major rally took us from 1181 and took us all the way up to approximately 1365 and then it initially stopped at 14, call it 1420, 1430 before beginning to head south. Now, when we take a look at this one retracement, and this is from 1188, that of course is the most recent low we hit, just above that 1181, and this is coming from about 1365. And so when we do that, our next real level of real resistance in the market, should this market continue to rise, and I do believe, as I said, we're in the fourth wave, we'll look at that when we pull up our next chart, but you'll look at 1227 and maybe even 1253 as our terminating point for the top of this wave 4. So in terms of our exact count, what I'm looking at is follows. Let's go ahead and scale this a little bit better. And really what this chart is, it's a 2-day chart. It is in Japanese average format. And I like to use the Japanese average format because it really clarifies the changing of the minor count. We had the long wave 3 down. It terminates right here. This is our low at 1181. From there, we had our wave 4. And my belief is our wave 4 was composed of a simple A, a B, and a C, terminated wave 4 and took us into this long wave 5. In terms of our count for the wave 5, I'm showing it as 1, 2. I don't really see this as really being wave 4 here, so we've got a long 3. And if in fact this rally continues, we could expect this wave 4. As I said, it could terminate as high as 1257. We've calculated some of the points that it could go to. We'll talk about that on next week's show. And then I still believe we are going to see one final wave down, 505. And I also believe that that final wave down will probably break this low. If it doesn't, it's simply called a truncated or a bear truncated market or truncated fifth wave. But I still believe that what we're looking at right now in terms of the breakdown of this fifth wave is we haven't really entered 4, but there's a real solid chance that these are the beginnings of that. And to look at that with a little bit more detail, what we can do is go ahead and convert this to a 1-day chart. Let's go do that. So it has now been converted to our 1-day chart. This is the top of 4 or C. And in terms of our basic count, 1, 2, I do believe this is 3. You can see how it almost began to form somewhat of a fourth wave, but it didn't really have the power to carry it above. And as you can see, we've got these green candles, but they are very, very small in terms of body size. But I'm not giving it that much credence. As I said, as we go into the end of the year, we do have such light volume that it really doesn't take as much to move a market, but the same factors are still going to be in play. So as I said, it's my belief that we might have in fact started this fourth wave up, and on termination of that, we will still get a fifth wave down. So to stand back and kind of take a look at the much bigger picture, I've pulled up our weekly chart standard candlestick format, wave 1, wave 2, long wave 3 down, wave 4. We are currently in wave 5. As I said, wave 5 should probably terminate below that of wave 3, 1161. Very, very important point, because 1161 is a retracement of the move from 700 all the way up to 1920. Now, as far as silver goes, my current belief is we're actually at our current resistance level is really 20.09. I'll pull up a 60-minute chart that will show you that. In terms of major support in the market in silver, I do see that still at 1958. That's been a critical point for us for some time that we've been looking at, and it's quite easy to see why. When we look back to 2011, you can see these series of tops. It's certainly resistance. Does come below this, but as the market comes back down, this is the first time it's actually touched in these low areas. It doesn't make it down to these lows, and in fact bottoms out at around 18, and we see it being supportive right in here. Now, where's our current resistance at? For that, let's look at a different chart. So if we take a look at the recent range that we have seen in silver, and to do that I've run one fib retracement, and that retracement is from about 1887, that's this low here, and it goes all the way up to this top at about 2047. And when we do that, we get different areas, but the 76% retracement is 2096. That's really our next level that we would look at to see if it can break through that. If it in fact can, it's got these series of tops right here at about 2030, and then of course terminating at 2047. Those would be the three upper levels of minor resistance currently in silver. This has been Gary Wagner, wishing you as always good trading. I trust everyone had a good holiday and is looking forward to a new year. We'll talk to you on Monday for another daily update and review. Bye-bye.